All right, so overall, we're getting near the breakout point of the June 1st high. And because of that, because we're getting near the breakout point of the June 1st high, I think the odds are we're going to reach down and we're going to reach it. And we're close enough to it that we should end up getting there. So far, good for the bears. We're getting 3 consecutive bear bars, testing breakout points, all of those things, good. And now we have 3 consecutive bear bars. You have to start to wonder, are we going to get down to the July 16th high? These breakout points over here around 7,600. I suspect we'll probably try and bounce, but I have to say, with 3 consecutive bear bars and the bodies increasing in strength, there's probably going to be less urgency for traders. There might be less traders interested in buying. It's possible tomorrow forms a strong bull bar closing on its high, but I'm not confident that's what's going to happen yet. I suspect more likely we may be sideways and go a little bit lower, but I do think we're going to fall below 7,700. We're close enough to it. And then 5-minute chart, we ended up gapping down on the open. But I made a comment that the gap was reasonably large compared to the average daily range. Whenever you get a gap down that's fairly large, that increases the odds that you're going to have a lot of trading range price action. And because of that, whenever the gap down is large, I made the comment that even on the open, the gap, the range was already pretty big relative to the past several days. And that lowers the expectation that the market has to go all that far. And then bar 1, we formed a doji. Not a great buy above, not a great sell below. And then 2, we formed a bull bar closing on its high. That's good for the bulls. What about buying it? I would not. You have a doji bar and an overlapping bar with bar 2. Overall, I think low probability that the bulls are going to get some kind of strong reversal up. And then 3, we have a second entry sell, good for the bears. But now we have competing things. We have a strong reversal 2. We have the bear reversal 3. That makes me think we may end up going sideways here. 4, follow through for the bears. 3 and 4, good for the bears. Increase risk, we get a second leg down. But tight trading range, not great for either side. And then 5, bull bar. There's probably sellers above, but again, in general, a tight trading range lowers the probability for traders to be buying or selling. And then 6, we had a second leg down with 3 and 4, but probably going sideways. I still think buyers below 6 scaling and lower. And then 7, we tried to break to the upside with 7. And we found buyers in the bottom third of the 6 range, but tight trading range. Not a great buy, not a great sell. Then bear bar 8, this obviously is forming breakout mode, and it's a triangle. You can sell below 8, taking a chance we get a second leg down, but low probability. A relatively big bar forcing you to sell in the bottom of the range, not ideal. We broke to the downside 9, but we failed to close on its low, and we found buyers. And then 10 reversed back up. So far, we've tried to break the downside, and we got a second leg down. That was the minimum expectation for the bears after the gap down, but now we're just going sideways. 11, overlap with 10, good for the bulls, but not yet high probability. And then 12, a doji, probably buyers below, but you really want to buy in the middle of the range. You can see the green line. Open the day. We're spending a ton of time around the open. And we got a small second leg up 13, but to me, it looks like we're just going to be sideways. Bull bar 14, but I suspect probably lack of energy and limited upside. 15, outside down. I suspect we're probably going to go at least a little bit lower, but we may not go that much lower. We have a bear bar closing on its low. Not that great of a sell. Plus, we have the moving average not far above. And 16, doji, still in the middle of the range, not ideal. Second leg down. 17, good for the bears, but downside risk probably limited. 18, doji, not a great sell. Outside up 19, good for the bulls. And then 20, we have a breakout pullback sell, but I still think we'll probably end up going mostly sideways here. 21, we tried to form a micro double bottom with 19 and 21. Still probably buyers below in a second leg, and then 20, at least second leg up. 22, trying to go a little bit lower. Channel's getting tight, but now we have a possible wedge, 1, 9, and then somewhere down here. And then 23, we have a doji bull bar. I suspect that the upside is probably going to be limited. And then 24, we have a consecutive bull bars, 23, 24, probably buyers around the midpoint and a second leg up. And then 25, doji, I suspect the downside risk is probably limited. And then 26, that limits the upside potential. Makes me think that it limits the downside potential, and makes me think we'll probably get a second leg up and test the moving average. And we got a second leg up, 27, good for the bulls. But until we break clearly out of the range, probability is pretty close to 50-50. Follow through 28, good for the bulls, right at the moving average, and the open of the day, fairly dangerous. More follow through on 29, but again, we're just going mostly sideways here, and it's really not ideal. And then 30, bear bar, not ideal. Probably buyers. 31, bull bar, probably limits it upside. And then we started going sideways for all these bars. 36, and you can take the sell for a swing, but I mentioned low probability. Bull bar 37, but until we get a clear breakout up or down, I suspect we're probably just going to be sideways for the rest of the session. And then more sideways trading. We tried to break to the upside, 40, but it's a bull bar closing on its side. It's good for the bulls. You really want to buy it though. It's just one bar. If anything, bulls need strong follow through. They don't have it right now. 41, doji, not a great follow through bar. We may get a small second leg up after 40, but not all that clear. Then doji 42, I suspect we'll probably pull back. And then 43, not a great sell. Then 44, bull bar, probably limits it upside. And then 45, bear bar. I still think realistically we'll probably get some kind of second leg up, but again, not all that clear. It's middle of a tight trading range, low probability for both bulls and bears. It's basically a contracting trading range, tracking triangle. 46 follow through, good for the bears, second leg down likely. And then doji 48, I still think we'll go a little bit lower than 49. And 48, good for the bears, but looks like this is a leg in the trading range, so probably buyers not far below. And you can see, and we just started drifting sideways to down. Bear breakout 54, good for the bears. What do you do with it? Well, you can sell it, but you're selling at the bottom of a trading range. And so far, if you take away 54, you wouldn't feel like great about selling, and that makes you think that's probably a trading range. 55, doji, I still think probably sellers above and a second leg down. And then 56, outside down, but probably limited downside. And then bull breakout 57, good for the bulls, probably going to get follow through. And then 58, good for the bulls. But now you're in the upper third of the range, and we just may start to go sideways. And that's in fact what we did. I win buy, not a great buy. We may get a second leg up, but why is 61 not a strong entry bar for 60? And then we got another doji 62, make the bars bigger. And we triggered the buy above 60 on 62. Then we sold off 63, bear bar closing on its low, not ideal. And then we started to drift sideways to down with 65 and 66. And then 67, 68, bull bars, maybe a second leg down, but bottom of the range. We might break strongly to the downside, but so far probably won't. And then we ended up reversing back into this overall range. The bulls who bought 57 and 58 were disappointed. They'll look to scale in, and that's what happened. 70, 71, strong enough for buyers blowing a second leg. That's what they got on 72. And then obviously we ended up testing down. There's really not a lot to say about this type of day. Reality is it's a tight trading range, and I think it's really easy to end up doing too many things that you shouldn't do. By the time it looks bullish, it reverses. By the time it looks bearish, it often reverses. And that's typically a dangerous environment to be buying or selling. And that makes me think that, realistically, most traders are better off waiting for the market to go sideways. Limit orders, it's pretty much all limit orders. You can sell above bars, you can buy below bars. I thought sellers above 16, okay, but I think really tough. And then when you're in the bottom of the range, better to look to buy. You can buy below 25 for a second leg, probably okay. And I think it's tough. You can sell above 48, but I think it's pretty tough middle of the range. If anything, you're probably buying down here, especially after 55. It's a small second leg after 54. And then I thought, probably sellers above 60, but tough to do when you see 57 and 58. I thought probably buyers below 59, 69, but late in a triangle breakout mode. I think that's a really difficult situation. And then stop orders, there's like hardly any good stop orders. Selling below 15, not ideal, but you don't have to get out above 16. And then if you do, what do you do with 19? Do you get out? You might. Otherwise, you probably get out somewhere down here. I think it's really tough. I think it's tough to buy this. Maybe you sell 46 if you're taking a chance. It's a lower high with up here, and you'll test down to the lows. Plus the overall context, big gap down. But I think it's really tough to stay short when you see this. And then, what do you do down here if you're short? You got to be really quick to exit your shorts. And if you buy during 57, now you're in the upper third of the range. And what do you do with 63? You probably got to get out, and it's basically a break-even trade. You can buy above 70, but what do you do right here? You probably get out again near break even. So it's a really difficult day for stop orders and for a lot of trading. And that's why a lot of traders are just going to be better off being patient and waiting. Let me take a look at questions. There's two things. One said, I don't know what to ask, and I'm shocked about the price action. Yeah, I mean, on one hand, I get being shocked about the price action. But it's trading range. It's a contracting trading range. And yeah, I wouldn't be too shocked about it. You're shocked about it because you're not thinking about the overall Globex session. But if we were to look at the Globex session, it would actually make a lot of sense. If this was today, here, somewhere over here, and the market sold off all the way down here, you would say, wow, what a really strong bear trend day. And that's basically what happened. Only difference is obviously, this is midnight, but if you think about yesterday we had that kind of trending trading range day, and then we continue to sell off. And so we've sold off a lot in the past 24 hours, 48 hours. And so this sideways trading is just due to what happened in the Globex session. So overall, I wouldn't think too much about today. This kind of day is going to happen, and the key is recognizing it and just not getting killed. Just being very cautious, not do anything too reckless. So overall, it'd be interesting to see what happens over the rest of the week. And bears, they want a second leg down. They want a test of 7,700. There might be more traders buying around that location, but we'll see. Okay. Thanks everyone. And I will talk to everyone later on.